Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss the CBOE Nasdaq-100 BuyWrite Index tracked by the Global X Nasdaq-100 Covered Call ETF, ticker QYLD. Mark, it's great to see you. Welcome back to Trade Talks.
Great to see you too, Jill. Great to be back.
All right, and investors, of course, with rates so low, are always in search for yield. Tell us about the BXNT index yield versus market benchmarks and how it's performing.
Yeah, sure. So very interesting product. It's been around for a number of years now. On this first slide, what I'm showing you here with the blue line, that's the actual kind of trailing 12-month yield or total income that's been delivered by this index going back about 6 years, right, from June 30th, 2015 through the most recent June 30th of this year. And you can see that line has rarely dipped kind of below 7%. It kind of briefly touched around the 7% area, and I would say has averaged around 10% or more. Recently, it's had a great kind of yield performance, getting close to 12%. And how it accomplishes that really is twofold, right? It's a long position in the Nasdaq-100 index, which we don't think of as an income index, but it does have a dividend yield associated with it. So it does pick up yield from the Nasdaq-100 companies paying out regular dividends, as well as, you know, the bulk of that income, the bulk of that yield from the BXNT, that's the ticker for the index, is coming from that options premium. So, you know, you think of a covered call option strategy, essentially that is in the underlying. So in this case, we're doing long NDX, long Nasdaq 100. And then on top of that, we're selling call options. So, you know, we'll get into the mechanics of that a bit on the next slide, but in simplistic terms, instead of buying call options to have upside capture, if the underlying moves up, you're selling call options in this strategy and you're collecting, right, the premium that you earn from selling those calls to other folks out in the marketplace. And that's really driving the yield going up as high as it does in this strategy, up to close to 12%. You can see some of the other competitors in terms of market benchmarks here that I've laid out. Something like the Bloomberg Barclays US Corporate High Yield Index, that one's been hovering around 6% recently, but you can see it's been kind of steadily declining over the years. Similarly, the Bloomberg Barclays US Aggregate Bond Index, that one's only at about 2.5%. And then even something like the S&P 500 Dividend Aristocrats Index, which is all equity, all high dividend paying companies, that one is not even at 2.5% current yield. So you're getting multiples of sort of the bigger income benchmarks out there in the market. You're getting multiples of their yield with this product.
So what does a payoff look like with the CBOE Nasdaq-100 strategy that you're showing us here?
Yeah, sure. So I tried to show it visually here. The blue line is just the Nasdaq-100, right? That's a linear payoff. So the red dashed line is showing you where we were with the Nasdaq-100 at the end of June. That was at 14,555, right? If the Nasdaq goes up 5% between now and the end of the year, your payoff is 5%. On that index in price terms. You'll get a little bit of dividend yield, around 34 basis points over the next 6 months. And then if, you know, the Nasdaq 100 goes down 5%, you'll lose 5%. In the case of BXNT, which is in the purple, you're sort of locked in to a payoff of almost 6%, whether the Nasdaq 100, you know, goes up 5% or stays flat. You've locked that in by essentially, you know, giving up some extra upside on the Nasdaq 100 and still collecting that options premium and still collecting the dividend from the underlying. If the Nasdaq 100 has a negative return between now and the end of the year, you'll see that purple line, it starts to angle downwards closer towards 0%. But even with, you know, with a loss of 5% on the underlying, you're still going to eke out about a 90 basis point payoff with this strategy over the next 6 months. That's the hypothetical scenario.
So Mark, we spoke about BXNT yield. How about its performance versus other benchmarks?
Yeah, so what I've shown here is that same view from about 6 years. We looked at the yield, which is averaged, you know, really nicely above the other market benchmarks. This shows the total return performance Of course, since you're selling calls in this strategy, you are naturally capping your upside. We showed that in the previous slide in terms of how your upside is capped. So this strategy is not meant to outperform the Nasdaq-100, which you can see there is up 253% over this time horizon. But it is outperforming, again, some of those fixed income big time benchmarks in the market, like the Bloomberg Barclays US Ag, the US Corporate High Yield. Those are, returning 23% and about 46% respectively over the last 6 years versus almost 90% with this index with the covered call strategy.
Let's talk about the ETF that follows this particular index, Global X is QYLD. Are you seeing any growth with assets under management there?
Totally. So you can see, again, same 6-year horizon. We were at under 100 million for the first couple of years on this ETF. Growth has really just taken off ever since the crisis. Last year when the Fed cut rates to essentially zero in the short term, that dragged down rates for a lot of the rest of the fixed income market. We're almost up 500% year over year in terms of assets under management for this ETF. Really, really resonating, I think, with the market in terms of, if you're willing to give up some upside on the Nasdaq-100, you will still, generate a nice combination of, again, that core dividend yield that the companies there are paying you, plus this options premium. That premium is derived from, interest rates out in the market, the volatility of the NDX itself. It's a very, very nice alternative income generator to just traditional either dividend equity strategies or your fixed income strategies that are out there.
All right. Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.